Good morning, it's Harvey Jackson. More news on the war, day 8, I think it is. Crude oil and diesel are keeping support on the veg oil complexes, but we'll see that in the charts here. Israel pounds Beirut in expansion of the war. So as this, you know, deals with more and more countries, as Iran has been hitting other countries, and now there's participation by Hezbollah in Lebanon. You name it, it's just getting more and more. Um, Widespread. But Trump also wants to have a say in who the leader is going to be, and that's going to maybe slow down things until they have an uprising. I thought this was just an interesting fact here. Day 1 to day 8, your number of drones and ballistic missiles have gone down substantially because of a lot of the naval and air force is basically shuttered, and a lot of their radar and everything is all shut down as well. So they got to be a lot more strategic as time goes on, because there's as soon as there's a flash of light, it seems like there's going to be a bomb dropping on you. And this is just for laughs for me, but I would say Canada is maybe involved in here as well. But Muslim countries that favor the moving of the regime, and then Muslim countries against the removal, and as Great Britain, France, Spain, and I would say Canada is maybe included in there. So the StatsCan came out yesterday. It was a bit of a yawner. It didn't have uh, much in for changes in the wheat canola stance. If anything, like I had been saying, if it was less than 500,000 metric ton increase on canola, it's very likely to be bullish, and we're still seeing a lean in there. And if it was closer to the million, it would be bearish the market. But obviously, with only a slight increase, 1% increase, um, it did not get anywhere close to the trade estimates. And this is the other fact that got pointed out here as well. The the information was collected between December 12th and January 16th. So, well, dated information, but still, I still think it was incorrect anyway. Seasonal price index for red spring wheat. Uh, uh, Left Field Commodities, Chuck Penner posted this on X, so you can see where we are right now versus even last year in prices, and the 5-year index where the markets seasonally normally go to. So the weekly data is week 30. You can see canola. We had a smaller week than the previous week, only at 203,000 tons exported versus 243 the week previous. So year to date is 4.4, so way behind pace still from the previous year. Now, last year was a big year on exports, and we're definitely showing our shine on the crush now. So. World food prices rebound in February. United Nations saying increased by 1%, and average cereal prices moved up by 1.1. And another note of the FAO posting that there's a forecast a record of 3.029 billion metric tons of cereal production expected, and that's including rice and everything else. So weather, euro is actually favoring even a stronger El Nino for 2026, uh, and that's favoring usually okay growing conditions. But here you can see that there's lots of active weather in the U.S., and then we start looking at the weather for planting, and you've got precipitation that looks to be above normal basically, and temperatures to the south are going to be maybe a little higher. So anomalies on the 10-day temperature and precipitation, nothing really stands out on there. This is your drought index, and it does state here, February 26 was the largest drought area in the lower 48 when compared to all of the end of February drought monitor date going back to 2000. Just showing there's a bullseye of drier March to May analogs. Let's get into the markets here. Canola is up $3. Rapeseed is up 5.50. Soybean oil is up a half a penny at 66.22. Palm oil is up 160 ringgits at 4,367. Crude oil up another 463 at $83.27. And the diesel fuel futures is at 333, up 9 cents. Soybean making some new highs here, a breakout at 11.92. And soy meal up $3.03. Spring wheat up 10. Kansas up 22, and Chicago's up 16 and 3/4. And your corn is up 4 1/4, and the Canadian dollar is just up 0.15 of a penny. So I put in two different scared rabbit lines or trend lines, and this was the curve. Now the last few days with the war, it's actually elevated here. Just looking to see if it's going to break that line, and if it breaks that line, it's probably a sell on some of the long positions that we have there. Soybean oil, really can't draw a line in there. There's maybe not quite enough information there, but the canola, you can definitely do that. Here, your soybean oil futures have finally broke through the that high that was made back in November. Soy meal, really nothing to see there. But then you see your crude oil. We broke through yesterday, and then today, fairly long candle there on the crude oil. And the diesel fuel futures, the same thing. It broke through the higher value that was made previous to what's on the screen here. So what I've got here is just, beginning of the year increases in prices. So the black is your heating oil. This is your West Texas, and then blue we are your soybean oil, and here's your seeds. Not anywhere close to the same kind of rise. So we're going to look at just during the war, same thing. Your heating oil is the leader, then your crude oil, your soybean oil, and then your seeds. So you get your canola and your soybean with looks like no increase at all compared to the soybean oil. Interesting as well is just the oil share and meal share. So oil is actually passing off the meal in value of the seed. Canadian dollar, like I said, is really doing nothing, but there's an extension point here for your. If we cross that, there's likely some downside, but it looks like it's getting supported there pretty well. U.S. dollar increase still. Quick look at wheat. Now we're above that 200-day moving average. Important to stay above that, and if we can stay above that, we're still looking for some upside target there, of course, as well. Don't get in the way of the trend here. For new crop, I'm still looking at that $7 mark. Kansas, same kind of run up here. Chicago, same, matching some of the highs that was made there, but it's maintaining itself above that 200-day moving average for over 2 weeks now. And here we are. The French Matif is just above the 200-day moving average. Corn, trading above the 200-day moving average, and this pivot point extension, we're trading right at it and above it at the moment, and that would be the next target, and the next target would be up here as well for corn. Quick look at the live cattle. Nice recovery the last few days. Same thing with the feeder cattle. Nice recovery. There's a pivot point extension there. If we can get through that, that would be even more bullish, of course. And your hog futures trying to rally here as well. I believe there is some labor numbers out at 8:30, I think, for the U.S.